Plans are underway to review South Africa's electricity pricing policy. This has been confirmed by both the Minister of Energy and Electricity and his deputy. And I go, well, that's very nice, but what are the chances that that review is going to lead to lower electricity prices? In other words, a decrease in the price of electricity? I don't think the chances are very good. The rate of increase, might that slow down as a result of this review? I don't know. Eskom has to run its operations, it has to pay its staff, it has to pay back its debt. Can it do all of those things in a way so different that it can bring down or slow down the increase in the price of electricity? What do I know? Chris Yelland does know quite a lot about this sort of thing, though. Hello, Chris. Do you think that the review is necessary, important, other than politically? Politicians saying to consumers, look, we take your concerns seriously?
Yeah, it's a difficult one. I think it is politically necessary, as you say, because there is a growing sort of outrage on the ground at electricity price increases at multiple times the inflation rate for several years, and then most recently, the slapping on in addition to the price increases. In other words, not just a restructuring of the tariff, but it's an additional fixed charge per month, which is being applied, like for example in Johannesburg, on all prepaid electricity customers. Now, these fixed charges have been in place on postpaid customers, for years, but prepaid customers have largely been the poor, and the poor have largely been subsidized and have not had these fixed charges. So slapping on the fixed charges in addition to the normal above inflation, significantly energy price increases, has actually increased the price, for prepaid customers. A poor prepaid customer using about 200 kilowatt hours a month is facing a 60% increase in the price of electricity. And this is causing significant resistance and outrage. So I think there is a need to review the tariff methodology. In fact, the pricing methodology went out for public comment more than a year ago, more like 2 years ago now, and has never been finalized. There is a need to look at it.
What is the pricing methodology? I know how the fuel price, the price that when I fill up with petrol or with diesel, I know how that 25 Rand 62 cents, whatever it is at the moment, a litre that I'm paying. I know how much goes to taxes. I know how much goes to the fuel retailer, how much to the wholesaler. I know all of those things. I don't know how the electricity price is calculated.
Well, the methodology involves Eskom doing a thorough analysis of its costs for the next year or 2 years or 3 years. And it is a forward-looking analysis. And it also looks at its projected sales volumes. And it is allowed, in terms of the current methodology, in fact, it is required that Eskom should recover its full operating costs as an efficient organization, plus a fair return on assets employed. So every year it works out a complex structure of costs that are projected for next year ahead, and sales volumes, and therefore it requests a certain revenue from the regulator. And then if the regulator then looks at all these cost items and decides which ones it's going to allow to be passed through to the customer, and which ones that it thinks are not efficiently incurred or wrongfully incurred, like, for example, very high diesel costs as a result of their own failures of plant, and it disallows certain costs. But once it's worked out the cost that it's going to allow, and it's got a projected sales volume, you can then, it's a mathematical calculation to work out what revenue it's allowed, and then Eskom then calculates the tariffs for each individual customer class based on the sales volumes for each customer class, and works out tariffs for each different customer class, taking into account a number of cross-subsidies which are there to cross-subsidize The rich cross-subsidize the poor. Rural customers are subsidized by urban customers, and large customers subsidize small customers. But in the end, with all these tariffs, it's got to recover all Eskom's costs plus give them a return on assets. It's a complex process, but that is the way it's done.
How do you change it to make the price of electricity lower, which I think is unlikely, or to slow down the rate of increase? I suppose one way is to control your costs. One way to control costs is to reduce your workforce, but that seems unlikely to happen in the short term. So, what methodology could a review come up with that would slow down a 60% increase in the price of electricity, the poorest of Eskom's customers?
So, okay, look, firstly, I must tell you that what Eskom say is that their prices are 30% too low, and they should be 30% higher in order to be cost reflective. They talk about cost reflective. Now, there's two ways of making things cost reflective, tariffs. You can either put up the tariffs to cover the costs, or you can reduce your costs, and you've got to probably do a bit of both. And you've got to look at, what are Eskom's major costs? The biggest cost is primary energy, that is coal. The second biggest cost is probably finance costs. How do you reduce that? Reduce your debt. How do you reduce your debt? Sell some assets. List on the stock exchange. Raise capital. Become more efficient. And the other thing, of course, as you've hit on, is staff costs. How do you reduce your staff costs? Don't pay them as much. Reduce the increases, but that causes labor problems, unions. Government doesn't want retrenchments in state-owned enterprises, etc. But ultimately, another way of doing it, for example, is to outsource the operation of your power station to an independent operator who runs it and is given a freer hand to run it much leaner and meaner and more efficiently. And that's been done in many places in the world. Many people will say that our operations, state-owned enterprises in South Africa, are too fat. They've got too much fat in the system, and that if it was run efficiently and would become leaner and meaner. But there are many problems when you have a state-owned enterprise. People don't want to run lean and mean. It's uncomfortable.
Bottom line, Chris, can we have less radical price increases without government recovering the money from us in other forms of tax? The cost of primary energy, coal, is the biggest. So you accelerate the move away from coal to something which has less of an input cost, like solar. Realistically, is this review going to lead to anything, or is it just a political box-ticking exercise?
Look, I don't think the review in itself is going to reveal much other than perhaps a review of some of the subsidies and cross-subsidies that are involved that are not working effectively. But that's not going to solve the fundamental problem. The fundamental issues, are structural in nature and involve a restructuring of the whole electricity supply industry. What we must never think is that the distribution industry, the transmission industry, and the generation industry, which are run at the moment by geographic monopolies, that they are efficient. They are far from efficient. The electricity distribution industry is largely dysfunctional. Huge, maladministration, poor management, inadequate staffing, poor investment decisions. The thing is, it requires major structural reform in order to get that fat out of the system. The same applies to generation. We need a competitive generation sector that is diversified, and that's what leads to greater efficiencies and costs. But
keep coming back to the point I'm making over and over again. A review of the electricity pricing model is not going to lead to fixing of these very important reasons why our electricity costs are going up the way they are, because of these inefficiencies that you have highlighted.
I would agree with you. But that's not to say that we shouldn't do the review.
Okay.
There are cross-subsidies at the moment. For example, the free basic electricity, which is a poverty relief mechanism from national government, is fundamentally misappropriated. The money that National Treasury provides for this poverty relief mechanism, 80% of that money never reaches the intended recipients and is misappropriated by municipalities for purposes never intended. That kind of thing has got to be cut out. So that if you're going to have a poverty relief mechanism, that the money or the benefit reaches the intended recipients and doesn't get misappropriated along the way.
Chris Yelland, thank you very, very much indeed.